All attendees are in listen-only mode.
Good evening, everyone, and welcome to the May edition of Digging into the BI. This is where the people from the Maryland, DC, and Virginia get together and look at the latest issue of Better Investing's magazine, the BI. And tonight we're going to be looking at 4 stocks that came out of either that or from the website. And so it's going to be Fortinet, Taiwan Semiconductor, Western Alliance Bancorp, and Peabody Energy. And this program is being sponsored by the DC Regional Chapter and by the Maryland Chapter. So welcome to all, and let's go to our next slide. And this is our standard disclaimer. This is for educational purposes only. It's not intended as a recommendation to buy, sell a particular stock. We believe that investors should conduct their own review and analysis of the company before making a decision. And we may tell you if we own these stocks or not. We try to, sometimes we miss. But again, just remember if whatever sites we show and the like, it is not an endorsement of those particular products either by us or by Better Investing. And as you can see, we will also be recording this and it will go up on our YouTube channel, which we'll talk about in just a moment. Next slide, please. So for those people that don't know, if you're seeing it, and again, if you're probably in the audience, you know who Better Investing is, but since this goes up on the YouTube channel, some of you may be just searching and coming in. We are part of Better Investing. It's an investment education organization that focuses on long-term fundamental investor. And like I said, all of us are here from either Maryland or DC or Virginia, and we are all volunteers. With the handouts, make sure to download them if you're here live. And any of those blue underlines that you see throughout this presentation are hyperlinks that will take you to those locations. And again, you can share these slides with anyone that you so choose. Next slide. So again, as we were saying, we believe that investment education is a learn by doing, and those are the two people that were there pretty much at the beginning, George Nicholson on the right and Tom O'Hara on the left. And we are like them. We're carrying on their legacy, which is learning how to do investment education, and that you can do it just as they did it and just as we are doing it. So welcome. Next slide. And here's the YouTube channel I was telling you about. And again, there's the hyperlink up at the top. You can just click on that and go to it. If you're just in YouTube, just type in Digging into BI and you will, in that where the green highlighted is, you can go in there. We're trying to get to 100 subscribers. Yes, I know that's small in the YouTube universe, but hey, we started at a very small spot. We're at 89. This is a free program, and what you can do in return for getting this information for free is to be able to subscribe, like the videos, each one of them, not just one, and then share the videos with others. That's how the algorithm works. All of these presentations are organized in what YouTube calls chapters, and that is if you hover down at the bottom, you'll be able to see where there's sort of a break, and you can just go to those advances down there when you're in an actual one of the webinars themselves. So let's go forward. And again, for most of us are regulars here, but if you need any help in terms of, asking any questions or so, you can put it into the audience question. We'll be taking a look at it. Over on the right-hand side, there's a control panel. It's sort of a grayish blackish thing. You can open and close that to be able to reach where those questions are. Your microphone is muted. We will open it up during question time at the end, but you can also raise your hand and we will answer those questions when we get there. So welcome. Next slide. And again, most of us are regulars here, but in case you don't know or have trouble, invariably there's someone who's always saying they have trouble with their audio. Make sure you're clicking where the arrow is going towards the computer audio. If you're on your phone, you can do it that way. And again, that's where the handouts are, down below where the green arrow is. There'll be 5 handouts. One will be this slide deck, and the other 4 will be completed SSGs of the 4 stocks we're going to talk about tonight. Next slide. And again, to be able to help with your viewing, you can make this screen even bigger. And you can do that where the number 1 zoom is. You can make it full screen. And if you do see something that you like, you can always click on the screenshot and be able to save that. We do tend to move through our slides pretty quickly, so you may want to use that as a way to sort of capture and take notes. Next slide. And why are we doing this? Well, we are all members of Better Investing, and we want to be able to show you the benefits of your magazine and your membership. And up at the top, there's a free 90-day trial for anyone who is not a member. You can be able to try it. And we are trying to be able to show people that are beginners or have uncertain judgments on the SSG. Sometimes we will talk about the PERT report when we do some portfolio reviews twice a year. We're really just trying to do the best practices for long-term fundamental investing using the stock selection guide. And this is a joint program that's been put out by the 2 Mid-Atlantic chapters. We do have 2 model clubs. We are hoping to get a 3rd one up and running here between the 2 of them. And we also like to promote the Visit a Club program because that's a feature in this month's magazine. Next slide. So in just over an hour, we're going to go through 4 presentations: the monthly stock to study, the monthly undervalued feature, which are available to BI members. And then the other 2 come from the BI website or from the magazine. They can be personal experience, but this time I think we're coming in from the top 100 or top 200 and from, I think it was from First Cut. So those are we just want to be able to really show you how many good ideas there are with your membership every month. Next slide. So you can be able to see these in advance by going to the news releases, and then again, it's a hyperlink that you can take there, and you do not need to be a member to get access to it. These stocks that we're talking about tonight, Fortinet and Peabody Energy, were announced on March 2nd. So you could have looked at this well in advance and be able to see some of their thoughts. In fact, there's already the June and July are up because we have a combined magazine for June and July. So they're already up there, and take a look. Next slide. And if you want to be able to get future announcements, you can be able to sign up for this under My Account. Then there's the green email and product subscription. Click on that, and you can be able to, it will open up over on the far right-hand side, and you can be able to sit there and get the local news where I have the arrow pointing to. That way, if you're in the Maryland or DC chapter, you'll get it. But also where the yellow highlight is a BI Weekly e-newsletter. Very helpful, very good on a lot of stuff. Make sure that that's checked. And if you did do those and you're not getting them, check your spam filter. And then once you leave, go down to that circle and hit that Save Changes, and they will all save for you. So let's go to the next slide and see what that weekly newsletter looks like. This is for members only, and they will talk about upcoming events. They have one coming on up on the 11th of this month on the stock up, what's inflation got to do with it. They had one last week on Ticker Talk that will talk about some of the new features dealing with member sentiment and how to use the analyst consensus estimates for your judgments. But this usually comes out around the close of business on Thursday. Again, if you signed up for it, check your spam filter. There is going to be a little, we have our national convention coming up in June called Bink, and there's going to be a little segments that they will be promoting on Bink on May 18th. So go ahead and sign up for that as a member, and you'll be able to see some of those events as well. Next slide. And we're also up on Facebook, and I've been trying to keep things up and going there. I noticed some of our people outside the area have been going through there, so I try to keep that regularly. But we seem to get that being shared by a lot of the other chapters. So thank you very much for doing that and being a part of the Better Investing community. Next slide. Jonathan, why don't you tell us about what's going on in the Maryland chapter with their stock pickers contest?
Okay, so we are close to the halfway point with the stock pickers contest. We started January 28th and it will end August 26th. And you can see our leader, Bright Ideas, has a phenomenal 10.5% gain. And actually, Kevin, I think you're in second place. with 0%.
Yeah,
You
it's
know?
0%. Wow.
But it's not a negative, so that's good.
Well,
But
our
that's
other presenter is Simon Bar-Sinister. He's here tonight.
fantastic. So we still have some time. So the um, Stock Pickers Contest will continue through August 26th. It will continue to give updates over the next several months.
All right, let's move on. Cheryl, tell us about the book club.
Okay, DC Regional has a monthly book club that meets every month except for December. The next book that we're going to be looking at is The Intelligent Investor by Benjamin Graham, first printed in 1949, but a lot of what he said still holds fact. And so please join us. The next meeting is going to be on the 16th of this month, and it starts at 7:30 to 9. It's online. There's a virtual link that you can get when you go to the DC website and go to events, and it will give you that that link that you can come right in at 7:30 on that third Tuesday.
All right. Go ahead, Ken, tell us about your club.
All right, so I'm a member of Happy Destiny Investment Club. It was started in 2001 with 9 partners. We meet on the third Friday of each month. Excuse me. We're meeting from 6:30 to 9 o'clock online. Our members are in Maryland and Virginia area. For our next meeting, the education will be the orientation for our new members. And then in terms of stock studies, we'll have TSM and ACN. So if you're interested, our point of contact is diggingintothebi@gmail.com.
Seeing as how 3 of us are in that are presenting tonight are in that club. Let's go to our
And
next
we're going to
slide.
be back to 9 partners again.
Yeah. Let's go to our next slide. And so this is the other club that Ken and I are part of, along with some others, the Montgomery County Model Investment Club. We have 5 partners. We just lost a couple of them. So if you live in the area, we'd love to be able to have you come on by and see us. It's online. We used to meet at the Rockville Library, but I think we're very comfortable meeting online, and we'll probably stay there. And we're going to start showing, we're switching over to the My iClub, and we're going to start to use some of their features and learn how to use it. So we'll continue with that. We did it last month. And then we still have to figure out what our stock study is. But there's a picture of us at our summer social. And let's go to our next slide.
Okay, I'm a member of the Model Investment Club of Northern Virginia. I'm the lone Virginia wolf. And we started in 2008 with 11 partners currently. Its next meeting is May 9th, but it's the second Tuesday of each month. We also used to meet at a library, but now we're also very comfortable meeting online. So open to visitors. You can join us and see how we make the secret sauce. Next education is going to be what other clubs are doing and also how to do a first cut. And the stock to study is AVT or Avanet. Also, we are very proud of our Visit a Club program. We have a listing for the DC and for the Maryland chapter of clubs that are looking for members. So if you're out there in a club in either of those 2 chapter regions and you're looking for members, please talk to us about signing up on this list. We've got a lot of individual investors out there that may be looking for a club. And also, as part of our chapter outreach, we are doing club visits. So if you are a club that is looking for a director to come and speak on a topic that would be of interest to your club, please contact us as well, and we will get together and do a club visit. Also, we are on Saturday, this coming Saturday, May the 6th, having an anniversary meeting. We're inviting clubs with anniversaries in multiples of 5 years to talk about the secret to their longevity. And also it's open to all DC regional clubs and individual investors. It's going to be an opportunity to network with other clubs and like-minded individuals. You can talk about how your club's doing, if you're looking for new members. And this is going to be on Saturday, May the 6th at 10:30 starting at 10:30 a.m., running to about 1 p.m. There is a link also on the DC Regional Chapter website. Just again, look up local events and you will find the link to take you there. To you, Kevin.
Okay, and so since this is digging into the BI, we like to be able to look at stuff inside the magazine. So this comes out electronically earlier than it does in the mail, although the mail version got to me pretty early this month. But anyway, when I've asked in the past, everyone, they may look at the e-magazine. Almost no one looks at the app, and everyone waits for the paper magazine to come in. But try some of those newer technologies. Next slide. So one of the things you can do if you want to learn how to use the electronic forms is that there is a way to use a Better Investing magazine, see it on your mobile devices where that green arrow is. It's a different sign-in than what you use for your regular membership, but just go through there and we'll walk you through. It will be a different, like I said, a different password and the like, but then you can put it on your tablet or your smartphone or the like. And then the red arrow, the analyst reports and other resources, that's where you can find the additional information for the 2 featured stocks every month. And the featured stocks are what are the stock to study and the undervalued feature. So you can find that under the in the center there where it says the View Magazine issues. You can be able to click on it and get it. Next slide. And so we like to feature one of the articles in the magazine every month. In this one, the one that seemed most appropriate, since Jonathan is going to be doing Peabody and it doesn't really have earnings, is how do you adjust for buying a stock without earnings? And here's a really timely article with respect to that. And as the author, Craig Bramer, talks about here, he goes, you can maybe put a little bit of your portfolio into stocks that don't have earnings, but just realize you got to be willing to accept that risk. And he says when you're trying to figure out a company that doesn't have earnings, is try to understand the potential economic moat and their valuation or lack thereof. But really an interesting article. I recommend taking a look at it. Next slide. And we have anytime we have one of our local stocks that are, or local clubs that are featured in the magazine, I sort of like to highlight them. And this month in the repair shop column, we have the Regency Investment Club and Haymarket. And Cheryl, I think you're going to go visit them soon, are you not? If you're muted. I can't hear you if you're talking.
Yes, I'm sorry. I'm sorry. Yes, I'm going to be visiting with them on the 9th of May. They have been in touch with their president, and we're going to do it online.
Very, very good. And again, one of the reasons to be able to stay connected with your local chapter, because you can do things like club outreach and just be with other people in our community. Let's go to our next slide. And so here's the upcoming events. Most of these have already passed, but there's one that's kind of interesting that's up in from the Northeast Ohio chapter. There's a great place to check to see stuff. Some of it's online. Many of them are online. Some of them are free. Some of them you have to pay a little bit for, but you can just sort of sign up for them. So take a look at this one from the Northeast Ohio chapter. Let's continue on to the next slide, and I think it's time to start talking stocks. And so we have two stocks that we're going to do in core. The first one is a stock to study. Ken's going to tell us about Fortinet, and then I'll do Taiwan Semiconductor. So over to you, Ken.
All right. So Fortinet is the stock to study for the month of May. Next slide. They are the only pure play cybersecurity company on the New York Stock Exchange as well as the NASDAQ. They're a large and fast growing, they have a large and fast growing addressable market. Fortis Everywhere is their integrated platform approach for offering security capabilities and network functionality across local and wide networks. Their proprietary ASIC technology provides 5 to 10 times better performance, contributing to lower cost of ownership. And the business model is highly diversified across geographies, customer segments, and industry verticals. Next slide. They secure over 500,000 organizations worldwide. 63% of their customers are on the Fortune 500, and 68% of their customers are part of the Global 2000, depending on their software to stay secure. Next slide. The total addressable market is about 180 billion, which is growing to 249 billion by 2026. And that market seems to be growing at about 11% annually. In terms of their top line, enterprise networking comprises about 82.9 billion of their income. The cybersecurity is 88.5 billion, and then OT security is about 10 billion. Next slide. Their business is highly diversified across customer types, geographies, and industries. So we can see here with customer types, large makes up 39%, followed by the mid-enterprise and small enterprise, each being about 24%, and then finally the SP being 13%. And then in terms of geographies, 48% of their business is across 100 different countries, 27% in the US, and then the rest make up France, Germany, United States, Canada, United States, and Japan. And of course, they seem to be very well diversified across a number of industries. Next slide. They seem to have the largest operating margin with respect to their peers. So they're around that 30-35% area in terms of net margin, although other companies seem to have larger year-over-year growth, like CrowdStrike and Zscaler, for example. But the two major players in this area seem to be Palo Alto Networks and Fortinet. Next slide. So taking a look at the value line report here, you can see that they are trading above the value line here, suggesting that they're overvalued. Based on the 3 to 5 year projections in terms of annual total return, you've got a range between 7 and 18%. Their financial strength is B++. Earnings predictability has a rating of about 70. They are buying back stock. They've repurchased 192 million shares over the past 5 years at a cost of 4.8 billion. And then there's a $425 million CapEx program this year that will probably make it a little less attractive. So, investors looking for exposure to the cybersecurity industry should keep an eye on this neutrally ranked stock based on the opinion of the analysts here. Next slide, please. And then kind of taking a look at the cybersecurity industry. Stocks in the cybersecurity industry have bounced back in recent months, as has a good swath of the technology sector. The prospect of slowing economic growth has led to cutbacks in corporate IT spending. stocks in the cybersecurity industry regained a good amount of lost ground since their last review in January. 8 of 12 stocks posted double-digit increases in market value, led by Palo Alto Networks. Meanwhile, shares of Fortinet advanced of nearly 36% after it reported record sales and earnings in 2022, and further growth is likely in the cards for this year. So we can see that the industry is ranked around the middle of the market here at 39. Next slide. Taking a look at their peer comparison as shown on Morningstar. The major players here, Palo Alto, Cisco, Fortinet, all have wide economic moats. The undervalued companies seem to be CrowdStrike and Cisco Systems at this time. Fortinet and Palo Alto seem to be somewhat fairly valued at this point in time. Next slide. Then taking a look at the bull and bear case, according to Morningstar, Fortinet has strong secular tailwinds as endpoint security, cloud security, and the convergence of networking and security are projected to grow rapidly. Their strength in high margin firewall segments should allow the firm to generate substantial cash in the future. And the company seems to stand out to benefit as clients consolidate their vendors and opt for platform-based cybersecurity approaches. The bears are saying that the large public cloud vendors often offer their own cybersecurity solutions, which could hamper Fortinet's growth opportunities. Competitors also utilize a platform approach, thereby entrenching them in their clients' ecosystems and making it harder for them to displace. And then finally, there's always a risk that Fortinet may miss out on the next big technology, thereby allowing its competitors to catch up. Next slide. So taking a look at the evaluating management here in Core, pre-tax is well above the 5-year average, at least for 2022. Return on equity is down minus 130%, so it's somewhat down below the 5-year average. We seem to have accumulated some debt here in 2021 and 2022, and I think this is really related to the stock buybacks that they've been doing. I think the debt they've been taking on has been used to do some of this stock repurchases. Next slide.
5 minutes, Ken.
Okay. All right. So in terms of my judgments, I have 16% for my 5-year sales growth. It results in $9,278,278 I want to say 9.2 billion in sales, which is in line with the 11.7 billion in revenue being projected over the next 3 to 5 years, according to Value Line. I selected 16% as my earnings growth judgment that projects out to be $2.23 within 3 to 5 years, and that's in line with the 3 to 5 year projection of $2.40 as indicated by Value Line. Next slide. This is a high flyer in terms of PEs, so I do have a rather high PE for this one at 64.7, resulting in a high price of 144. The low PE I selected was 32, and that's in line with the average of the last 5 years. So that results in a low stock price of 34.2. Next slide. based on the way it's currently priced, at least as of last Friday, it's in a hold range. Next slide. And the return is 18%, which is within the 3 to 5 year range, being projected by a value line for annual total return. Next slide. So in conclusion, Fortinet is in a cybersecurity market that has a total addressable market of $249 billion and growing within that market. They're an industry leader. They have a diversified revenue base, and they have billings of about $10 billion going out to 2025, or at least by 2025. Next slide. And now we have Kevin.
Okay, thank you, Ken. So I'm going to be talking about Taiwan Semiconductor. This will be the third different semiconductor presentation I've done in a month. So I think I'm starting to become a non-technical expert on semiconductors. But we're going to be talking about, like I said, TSM. It's in the top 100 of BI. That's where I found it. And let's go to our next slide. And so, like I said, the top 100 comes out every year in April. And last month we looked at Micron Technology and Enphase. We did that. And this month we have Western Alliance and Taiwan Semiconductor. And when I was going through the list of all the stocks that we have in the top 200 in Better Investing, look at all those in that sort of that purple box in sort of the bottom center. And all of those are semiconductors, all doing different aspects of it. And, I'll be honest, prior to my really digging deep into it, I couldn't really tell you much about the differences between them. And so let's talk about it now and go to the next slide. We need semiconductors to be able to function today. As it says there, a newer automobile now needs 1,400 to 1,500 semiconductors. 54% of the manufacturing cost of an iPhone 14 comes from semiconductors. And those are all hyperlinks to those stories. And then the one down below, chips are the new oil. That comes from the Wall Street Journal. And it really is like, if the Industrial Revolution was moved on oil, this new information age and the Internet of Things and AI and robotics are all going to be pushed by what's going on with chips. So anyway, let's continue on. And so just sort of a quick pitch on this. What they really are, the semiconductor is a material that has electrical conductivity between a conductor, usually, and then an insulator. So it can usually be like copper and glass. It became really commercially viable in the 50s, maybe the 60s, I think early 50s may have been with National Semiconductor. And as you can see, just the number of chips that are being made are unbelievable, right? They're projecting right now 1.1 trillion chips will be made in 2023. And where we are right now is the latest high capacity ones are ones that have a 5 nanometer or a 3 nanometer. And to give you an idea, that image over on the right hand side, that is a picture of or a graph of pollen. And a 1 nanometer, and nano literally means in ancient Greek means dwarf. A nanometer is 1/1000th of a meter. It shows you that 1 nanometer is 40,000 times smaller than just pollen. In other words, you cannot see these with your naked eye. That's how small these things are getting. And they're going to need people to be able to put that together for us. And the high technology, the 5 nanometers or N5 and N3. I may have done that wrong. They may have been 3N and 5N. I'm sorry if I got that wrong. But that's where the stuff is going on. And that's one of the places where Taiwan Semiconductor is really pitching itself. Next slide. So the semiconductor industry is not monolithic. They have people that just design the chips. Those are called fabless. That means that they're not a fabrication, and so they're without it. And that would be stuff like NVIDIA, Qualcomm, Broadcom, which is AVGO. Then there are companies that are foundries or fabrications, and that's like Taiwan Semiconductor. Then there are some that are diversified that do a little bit of both, the integrated design or IDMs. then there are people that have the equipment to work on this well. And some of these companies, and Taiwan Semiconductor is exactly one of them, are sort of a modern day pick and shovel investment play. So pick and shovel would be, the people that made money during the California gold rush were not the people that mined for the gold. They were the ones who sold them the picks and the shovels and the Levi Strauss selling them blue jeans. And so here's an opportunity if you see all this stuff talking about with the latest and greatest stuff with robotics and AI, they're still going to need chips to be able to do it. So understanding this industry is going to be really critical for your investment knowledge. Let's go to our next slide. So this comes from CFRA, one of the places I like to go. On that second page, when they do have an analyst following it, they really have a really good summary of all the stuff that's been submitted to SEC. This is the CFRA's editing of it, but you can see again how many different products that they produce, TSM does, and that they have 532 different customers. Their major customers, their largest one is Apple, but MediaTek, which is another Taiwan company. There's Broadcom, there's NVIDIA and Qualcomm. And you can be able to see that TSM controls 58% of the fab market. And again, fabs are the foundries. They're the ones that make it. And then after that, the next one is Samsung, and I think that's United Microelectronics Company, if I'm remembering right. And then in the high capacity ones, TSM, as I was telling you before, they have 90% of that market. So anyone that has to come on in there is going to really need to work with TSM. And so their goal is to be able to really sort of help those companies succeed in doing their stuff, and they're just going to make the chip for them. Next slide. So here's an idea. This comes from Statistica, a really nice graph on sort of the semiconductor foundry. And you can see it from the bottom. There's TSM, and they're in Taiwan, although they are building other stuff around here. They made a $40 billion investment in outside of Phoenix. But then you have Samsung right after them, then United Microelectronics Company, also Taiwanese. Global Foundries was at one time, it was part of the wealth fund of the United Arab Emirates. It's now gone public about 2 years ago. And then the last two up at the top that have the smallest share, those are the Chinese companies. And one of the things to keep in mind, the Chinese companies really can't get to that 5 nanometer. They don't have the technology or the skills and expertise that they have at TSM and some of the other places in the world. Next slide. So if you want to learn more about the semiconductor industry, there's a series of different articles about that. One that was kind of interesting is the fourth one down. It's a YouTube thing where a guy points out that Warren Buffett sold his position in TSM. So if we like to follow what Warren Buffett's doing, maybe this is not the one to get into, but we can take a look at this as we go through. But those were some of the resources I used to help me go through this. Next slide. So here's a visual analysis in core. And, some of those companies I just showed you that are foundries, they're not publicly traded, or they are, in China. They're really in China and Korea. The Samsung is a Korean company, but we can get it in the online tools. And then there's the United Micron Electronics Corporation, which I believe is also Taiwanese. So you can really sort of see where our competitors are with this. Other than that, there's a good up, straight, and parallel that we look for from TSM. Next slide. So let's look at the management stuff. And again, you'll see in the black line, that's TSM. And then you can see the other two, Samsung and UMC, they're doing pretty well. They won't show the quarterly stuff that goes on. The one thing that's, the numbers for Taiwan are clearly better. Obviously, though, these latest 2 quarters are crashing. And some of that is a reflection of the fact that they're spending 40 billion with a B on their product, their new big plant that's supposed to come online, I think, in 2024 outside of Phoenix, as well as some other projects that they're doing, trying to diversify away from Taiwan in case something happens there. Next slide. Here we are on return on equity, and clearly they're the strongest of them all. And heck, if you even look at Samsung, Samsung didn't even have return on equity. They had some, they didn't get any numbers in there. I don't know if it wasn't because they were reported or what have you, but overall, the numbers here are better for TSM. The one thing you can sort of notice is that the industry includes not just the foundries or the fabs, like TSM, but they include other ones. So that's one of the reasons why you'll see higher numbers in the industry average and peer group. And part of it is because the reason why Taiwan Semiconductor has sort of created this niche, and they started in 1987, is that this is the lower margin part of semiconductors. Most of them like to be fabless, like a NVIDIA. They have much higher pre-tax profit and much higher return on equity because they don't have the capital intensive products that the TSM has to have. So keep that in mind when you're doing your evaluation. Next slide.
5 minutes, Kevin.
Thank you. Here's the debt to capital. And again, you can see a rise in the debt that TSM, some of that was, I think, from, again, some of their new products and projects that they're doing. They have to do a lot of R&D just to be able to stay ahead of it. And again, they are a capital intensive, and they are building other plants. They're building another plant in Japan. And I think they have a couple others, again, outside of Taiwan is what they're trying to do. Next slide. One of the things I like to look at is when I see that Morningstar covers them and see what their moat is. And it's not too often that you can get a company that has a wide moat, as this one does, has exemplary capital allocation, as this one does, has sort of a medium uncertainty, which is pretty good. And then that price to fair value estimate, the FVE over on the far left, anything under 1 is sort of considered undervalued. And for us in better investing, that would be the same as if we had a relative value that was really pretty low. And some of that, but overall, even with these 2 down quarters, Morningstar still thinks that there's a lot to like about this, and they have it as a 5-star. So that just sort of confirms what we were basically seeing in that evaluate management stuff I just showed you. Next slide. So here we are. I'm forecasting my sales and earnings. Historically, I had sales at 13.5. I did it at 10. I see historic earnings growth at 16.4, and I did it at 8.5, 8.4 really. Again, I think those are, cautious numbers, but not so cautious as to get away from them. And I still think that those numbers, and they project out fairly well going all the way through. Next slide. This is relatively new, and again, I was mentioned it when they have these webinars. This, you can go back to last Thursday, is they're showing you how to use the analyst consensus estimates in this new feature, member sentiment. I talked a little bit about it in my presentation last month on Micron, but it's a great way to sort of double check if you don't have a lot of resources to find it. You can go in here and you can customize this and to be able to see what sort of our community is doing, and it takes out ones that are really outside sort of the standard deviation. So go ahead and take a look at this. And it's not just for earnings. They do it for sales, for the high and low PEs, for the high and low prices, all of those things. A great way to sort of double check yourself with other people in our community. So keep that in mind. Next slide. So here's my forecasted high and low PEs. I'm going with a forecasted high PE of 20 as opposed to 23.2 as a historic. And I'm doing a low PE of 9, where historically has been 12.4. It gives me a high price of 192.50, and I went with a low price of 55.80. That was the 5-year average low, and that got me to about 33% off of the current price. And I think that's kind of reasonable when you have something in this industry which has a very strong cyclical characteristics. Next slide.
1 minute, Kevin.
Thank you. Upside downside is 3.8 to 1. Looks good. Next slide. Here's our 5-year potential. I'm getting this at 19.3%. They do pay a dividend, and I was projecting out the dividend payout ratio at 20%. So anyway, that's sort of what it looks like. Let me go to my final slide, my conclusion. Well, I'm sorry, I had an audit. If we do go back one, This again just confirms exactly what we said before, is that maybe this is too good to be true. The relative value is kind of down there. But again, I think some of that, if you can understand where those last two down quarters are, this could be a great buying opportunity. Final slide now. So it's a large size, steady growth company, well managed. You have some caveats there that I've mentioned. It can be really undervalued from where it is right now and where it's historically been trading. And I have this as a buy up to 90. I think this is something you ought to consider either for a purchase or to add to your watch list. So thank you very much. And let's go to our next presentation. And we're now going to go over into SSG Plus. And Cheryl, you're going to get us started with Western Alliance. Take it away.
And here. All right. So Western Alliance found this in both the value and the roster predefined screens, as well as on a recent first cut and in the ticker heat map. So banks have been in the news a lot lately with the failure of Silver Lake Signature and Silicon Valley banks, and they kind of dragged Western Alliance in there as well. But Western Alliance has done something to kind of throw some of the stink off of them that haunts these other banks, and that is providing a very good first quarter that shows their good disclosure and offers examples of what we should be looking for in a bank. So here we have a timeline of what's happened with the banks. March 9th, Silver Lake Bank announcing their portfolio sale and planned capital raise ignites extreme selling pressure, and then they had runs on the banks. March 10th, Wall announced a robust first quarter deposit growth of 7.8 billion. The 10th and the 12th of March, both Silver Bank and Signature Bank failed. There was confusion over perceived uninsured deposit percentages, and tech exposure led to intense selling, shorting pressure on the various commercial banks. Western Alliance Bank was proactively addressing that liquidity execution risk and drew 25 billion in cash from the FRB, which is the Federal Reserve Board, and to support that liquidity. Then on March 13th, there was unusual option activity and pre-market selling pressure, which followed SBNY Signature Bank's failure, and that leads to Western Alliance opening at $12 per share. The outside stock volatility creates negative signaling effects on deposit flows. And then Wall deposits stabilize at 47 billion. Net growth in balances beginning with 900 million to quarter end. Since March 20th, deposits in Western Alliance have increased 2.9 billion. That's since March 31st to 49.6 billion by April 14th. And you can see that growth there on that graph. So we have deposit franchise characteristics. You can see here the insured deposit exposure trend, and that was part of the other bank's problems, was they had too much uninsured deposits. And here we see on the end of 2022, they had insured the 24.1 billion, uninsured 29.5. And then by the end of March, they had moved the to 32.4 billion of insured versus 15.2 billion of uninsured. And then again on the 14th of April, they exceeded even more the insured of just 36.2 with the uninsured at 13.4, and they're moving up again their total to 73% insured deposit. So Vol is in the top 10% of insured deposits compared to the 50 largest US banks. They have successfully retained deep-rooted relationships and those for which we offer proprietary and integrated treasury management technology, and also enhanced focus on protecting deposits. And here is some of the learnings and near-term priorities. They were well positioned at the onset. Prudent actions undertaken before and during March of 2023 enabled Western Alliance to serve clients, operate normally, as well as avoid the fates of other banks, using diversification of customer types, limited deployment of liquidity into longer dated securities, capital rebuild already underway, preemptive risk management planning and investments made in advance of 100 billion asset threshold, as well as timely and ongoing client engagement through communication of salient and updated financial data. Their top near-term priorities is to have safe and sound growth, emphasizing capital, liquidity, and holistic customer relations. The big thing on here is that organic balance sheet, repositioning and surgical asset sales to accelerate CET1 build greater than 10% in by quarter two of 2023. And remember that those for the three letters and the number of CET1 build is very important. So here again, complete transparency on the balance sheet has really helped them to gain some traction, not only on consumer loyalty, but also as well with investors. And so they have a HFI reclassification. They have surgically selected loan reclassifications from held for investment to held for sale portfolio. That is also very important. And they have an average mark of about 2% on that. Also, they have marks for future contracted and planned loan sales are already included in quarter one HFI reclassification fair value adjustment. So again, I was telling you to remember that CETI benefit. They have 1.74 billion asset sales completed in this first quarter of 2023, with the loan sales, about 920 million in loan sales, 360 million in MSR sales, as well as select security sales. And so that gives them a greater than 17 BPS, and that is the before product sales. And so remaining is another, in 2023, is another 3 billion in HFS loans remaining to be reclassified. So projected capital build by June 30th. Here again, we have that CET1 ratio. And again, CET1 is talking about the core business, and that should receive a minimum of 10% to 20% in 2022 already. And strong organic capital generation drove that net CET1 increase in quarter one 2023 and allows them to raise their liquidity through other business transactions. That HFS reclassification optimizes and positions them for stronger capital build going forward through asset sales, and executing contracted sales in quarter two immediately lifts that CET1 to 9.89. Now that is very good for banks in order to get closer to that greater than 10%. And they're saying now that they're going to accomplish that in that quarter to 2023. So there's been significant access to liquidity and funding capacity. You can see here that they have a total reclassifying of 26.55 billion into total available liquidity. And that is part of what the other three banks that failed did not have. They did not have the liquid funding available, which caused the run on the bank. And so Western Alliance is managing to overcome that by being better planning and actions that they have taken throughout the year. And you can see down at the bottom there the significant available liquidity that they have been building and building and building until they got to that 33.6 of the total liquidity available. They've repaid all the borrowing from the Federal Reserve discount window by the end of March, and the higher advance rates at the FRB's discount window available. FRB is a program that the Federal Reserve set up to help banks who are having problems, to give them one-year loans. And so by taking advantage of this, they managed to get that all paid off by the end of March. They have ample access to contingent liquidity as of 4/14 of this year, on balance sheet cash of 1.9 billion, and total unused borrowing capacity of 24.7 billion, for a total unused funding capacity of 26.6 billion. They have, again, that total available liquidity that we already talked about. They're contracted to sell another 3 billion of loans in April and continue to evaluate additional opportunities to establish secured borrowing facilities. So proceeds from the contracted and the planned asset sales will be used to pay down that program's borrowings to zero and reduce the borrowings to normalized levels of about 5 billion. So, okay, thank you. Here are some of the highlights of what Western Alliance has been able to accomplish. Again, looking at the tangible book value, that is a very good rate. Anything that is over 10% is very good for banks. And also the deposit growth is, all those things are at the excellent end of banks. And here is the tangible book value growth. The dark lines, both solid and lit, are Western Alliance, with and without the dividends added back, whereas the blue lines are their peers. Here is Morningstar and CFRA and Value Line, and they have financial strength of B++, with earnings predictability of 80%. CFRA has them as a hold, and Morningstar also a 3-star, but those are all quantitative, and they're at a 56% premium currently as far as Morningstar. Here is my SSG, and you can see, even with taking out the last 5 years and just concentrating on the most current 5 years, where they are, that huge drop in the price bar there is when all the banks were, the news came out about all the banks, but you can see their green sales line is still staying up, and their earnings per share line is a line estimated out is coming back as well. Here's evaluating management. Look at peers, most of which is are other banks in similar situations, and while you can see their numbers are doing the best for that pre-tax profit on sales. Same thing, return on equity. They're about even with Serve First Bank share in their numbers, but they are both on top of all the other peers. Looking at the price to earnings history, I took 7.5 as the average high PE, which got me a forecasted high price of 83.9. The low price, the average low PE of 3 got me to 26.3. I lowered that just a little bit to 25.9 just in case 70% with a 30% drop in the price due to unknown future news. Here is the gain versus the loss on the chart there. You can see mostly the buy is between 25.9 and 40.4, and they are currently the $37.10 current price, which puts them within the green. The upside downside ratio, potential gain versus loss, 4.2 to 1. They are not paying a dividend at this point, but I'm getting a 4.2 to 1 with the upside downside, which puts them in a buy. And looking at the using the forecast high PE, could get 17.7% for the total return. And in conclusion, Western Alliance Bancorp is a medium-sized growth company. They originally had problems similar to some of the failing banks, but turned much of that around, as I demonstrated, and especially using that transparency in their current quarterly report for their balance sheet. They're currently undervalued, trading below their 5-year average PE. They closed on the 28th of April at $37.12, and it's a buy up to $40.40, 4.2 to upside downside with a 17.7 total return. Could be a medium-sized addition to a portfolio. And I'd like to do a shout out to Ross Meredith, who did a wonderful bank presentation using Western Alliance for the Rocky Mountain Model Club on 4/19. And if you want to, the presentation and the recording are both available on their website. And it'll tell you a lot about what to look for in a bank on the balance sheet, as well as numbers and what makes a good bank.
Okay.
And back to you, Jonathan.
Thank you, Cheryl. And last but certainly not least, why don't we bring in Jonathan and tell us all about Peabody Energy?
Okay, thank you. Next slide. So Peabody Energy is the undervalued stock in the current edition of the BI magazine. Next slide. Peabody Energy is a medium-sized company in the thermal coal industry. It's America's largest producer of metallurgical and thermal coal. It's also it also markets and brokers coal for other companies. Next slide. The company is 140 years old. It started in 1883 as Peabody and Daniels. Francis Peabody bought his partner out, opened the first coal mine, and named it Peabody Coal Company in 1895. They became a public company in 1929, and they currently have 17 mines in operation. Next slide. Now, I put a red box around two areas under the mining operation, seaborne met and seaborne thermal. And these are the Australian mines. If you look at the graphic, you can see that there are actually 8 specific mines in Australia. And this is a focus because Peabody recognizes this as one of their areas. The Australia mines actually participate in marketing to the international communities. So this is one of their focus because many of the international companies, the Asian countries, are actually using more and more coal, and we'll talk about that later. The remainder of the mines are actually in the United States. Next slide. So coal is primarily used for electricity and steel production. Also, it's used for the production of cement. It's used in the paper, aluminum, chemical, and pharmaceutical industries. It's used to generate fuel and plant fertilizer. Next slide. Now, Peabody sold 124 million tons of coal last year. The majority, about 95% of that, was actually thermal coal. There's a small percentage sold that is actually metallurgical coal. Next slide. And metallurgical coal provides 70% of the world's steel production in constructing buildings for rail transport, and it's also used in wind turbines. Next slide. The demand for metallurgical coal is primarily driven by China and India's rapid urbanization. And you can see on the bar chart on the right, the dark blue at the bottom of the bar charts actually represents India's demand. And you can see that that's progressively increasing over the next several years up to 2050, where analysts are anticipating about 119% increase in demand for metallurgical coal. Next slide. 37% of the world's electricity is generated from thermal coal, and this is declining in production. So let's look at this phasing out of coal. First of all, over 40 nations have agreed to phase out coal in the coming years. And then number two, you can see China has the highest coal consumption, and that's progressively increasing. And then three, according to the Paris Climate Agreement, coal-powered electricity generation must fall by 13% every year until 2030. And then finally, electricity generation will need to reach net zero greenhouse emissions globally in 2040. So coal is decreasing throughout the world, but it will never, at least anytime soon, come to a complete shutdown. Next slide. Coal shares of US power is steadily decreasing. Back in 2000, coal was used to generate electricity about 50%. And currently, 17% of coal is used to generate electricity. And you can see on the graph on the right, the US primarily generates electricity by natural gas and renewables. Next slide. Many coal plants have been closing, and this has been going on since the 1950s. Many plants have already closed, and many of them are still in operation, but actually have announced retirement dates. Next slide. Now, this slide is specific for the Australian mines, the seaborne metallurgical and thermal coal. And it's looking at the demand of the Asian and Indian countries. And you can see that there is a progressive increase in demand over the next 10 years, while the total global demand is decreasing. Asia demand, the actual, this is an acronym for the Association of Southeast Asian Nations, and this would include countries like Singapore, the Philippines, Thailand, Vietnam, etc. Next slide. World electricity generation is increasing, but you can see the contribution of coal is decreasing from 40% to 28%. Next slide. So Peabody's long-term strategy, it wants to capture the higher growth Asian demand, and this is why they're focusing on the Australian mines. They want to maximize their cash, and they want to return more cash to the shareholders. Next slide. They have $892 million in free cash. They have recently approved a $1 billion stock buyback plan and also will be distributing dividends. Next slide. Now, they also have opportunities to create additional value by participating in renewables. They own 170,000 plus acres of land, and there's an opportunity to develop solar energy and storage. They manage 38 million gallons of water a day, so there's an opportunity to develop hydropower. And then there's also an opportunity to capture methane and use this for potential sale. So there's not much information, future strategy regarding Peabody's interest in participating in these renewables, but that would be something that I would definitely look forward to. Next slide. So coal is a commodity, and so its price is going to fluctuate based on demand. And you can see this is a 5-year price chart. And there was a significant increase in the price of coal in 2021 and also 2022. And now this is a result of the global community coming out of lockdown. When we came out of lockdown from the pandemic, there was a huge need for energy, and the price and the demand for coal started to increase. And then in early 2022, this was when the Ukraine-Russia war started, and there was also a huge increase in demand for fuel because of the ban on Russia's natural gas exports to Europe. So this has been a huge boon for the coal industry. And these prices are coming down. They're leveling off at about $190 per ton. And many analysts think that this is sort of going to continue for them through the future. But let's see the next slide. Many other analysts are anticipating that the price of coal is going to continue to drop through 2026 and 2028. You can see some analysts are anticipating a fall in the price of coal below $100 per ton. Next slide. So you can see this is a very cyclical and very volatile company. I'll just look at the sales. The green line is the sales growth, and it's decreasing. And let's go step by step, year by year. So in 2015, Peabody lost $2 billion. They filed for bankruptcy in 2016. They emerged from bankruptcy and started trading on the New York Stock Exchange in 2017. The economy was doing quite well around 2017 to 2018. It started to slow around 2019. And then we started to get into the pandemic around early 2020. And you can see there was a significant drop in earnings at that time. In fact, Peabody was on the verge of filing bankruptcy for a second time within 4 years. They worked it out with their creditors. And again, as we were exiting the pandemic and the shutdown, the demand for coal and the price of coal started to increase, and they became a profitable company again in 2021. I've also tabulated the value line and manifest investing's future forecast on the SSG graph, and you can see that there is a progressive decrease in earnings per share over the next 5 years. Next slide. The quarterly trend graph shows the cyclicality of the fundamental data, and you can see the last quarter, you can start to see this downward trend that's probably going to continue. Next slide. Let's look at management. The bottom table shows management's scorecard, pre-tax profit margins. Peabody had a negative 3.7%. Return on equity, negative 16.5%. This was much worse than the industry average and also much worse than the direct competitors. Their debt was probably in line with what the industry averages were, and they were pretty decent. But I think this is a red flag with respect to management scorecard. Next line. So I tabulated all of the analyst forecasts in my spreadsheet, and let's look at the earnings per share growth. All of the analysts are anticipating earnings per share growth to decrease. I circled Yahoo and Manifest Investing. These are 5-year earnings per share growth. The others are 1 to 2 years. I use negative 14 to come up with a 5-year earnings growth of $3.90. And this is consistent with what the analysts are anticipating over the next 5 years. That $3.90 is a decrease from the most recent earnings per share growth in 2022 of $8.29, but it's still much better than, if you look at the historical earnings per share dollars, the $3.90 is still much, much better than what the historical values have been in the past. Next slide. So the percent payout, I continue that at 11.3% because they've just introduced their dividend payment program. The current PE is 3.0. It's below the average PE of 5.1. I use big charts to help come up with the average PE of 10. And this calculates a high price of 39. I use the average low price of the last 5 years, $10.20 for my low price. Next slide. So coal is a commodity, and the profitability of Peabody is going to depend on the demand for coal and the price. The industry remains challenging. There's competition from natural gas, renewable energy sources. The projections going forward don't look promising. However, Peabody is really focused on developing a very strong balance sheet. They want to improve their free cash flow, and they want to continue to this shareholder return program. And they're also investing more of their resources into the Australia mines to take advantage of the international community's demands. Next slide. So this is a medium-sized company. I think it's very slow growing. It's a cyclical company. I think management is actually maybe slightly below average. This is a really challenging company just to analyze. If this is something that you're really interested in, if you like an energy company, and if you're really looking for a coal company, I think there are others that look much more promising than Peabody at this point. But being a cyclical company, there's also other ways to analyze these companies without using the SSG. And there's actually a great article in the Better Investing magazine from 2012, in November 2012 edition, that talks about analyzing cyclical companies. So I would keep that in mind also. And that is it. Thank you.
Thank you, Jonathan. Appreciate it. That was a tough one to do. We talked about that one beforehand. So we went through all of these really kind of quickly, but what we want to do is we're going to go through a quick review, and what we like to do is have all of our panelists sort of give sort of a quick thumbnail on where they sort of fit in the life cycle. And for those that haven't seen this before, let's just go to the next slide and take care of all of this. So we have the T. Rowe Price talked about the life cycle of a company would be sort of like the beginning, middle, and the growth, maturity, and decadence. This image shows up quite a bit in the BI community. It's basically a visual representation of what T. Rowe Price said. And so what we want to do is go around with our audience, and I'll have Ken. I forgot to get your location, but I just sort of had that in that location, so I didn't move it. Where would you put FTNT on this continuum? Is it explosive or mature, or where do you think it fits?
I'd probably put it over there with Wall.
Okay. Okay. Anything you want to add beyond that, other than you think it's just got some good growth characteristics?
Yeah, given the way, I mean, you've got double-digit growth, high double-digit growth, and then you've got PEs that are well above 30. So yeah, it's probably in that explosive growth area.
Okay. And I did Taiwan Semiconductor just sort of at the beginning of mature growth. It could be there for a very long time. Again, my judgment numbers were 10 and I think it was 8 is what I did, 8.5. But again, because of the driving that's going on in terms of the entire semiconductor industry, it's I think that it can be in this spot for a long, long time. And again, this is a pick and shovel play where people are going to have to come to them. And as long as they continue to develop the best of the new high capacity manufacturing plants, they'll be pretty good to do it. Cheryl, tell us about Wall.
Western Alliance has positioned themselves well with the problems that are hitting the banking right now, and will continue, it looks like, into the future. positioning themselves even better and meeting more than just the requirement. So I think they still have some explosive growth to go, and they I think that's a good position for them.
Okay. And Jonathan, you have one of those rare ones where we don't think it's in a good spot. Go for it.
No, it's not. I put it outside of the best investment opportunity bubble. I think there's a lot of uncertainty. They had a phenomenal year last year, but I think that's going to be considered an outlier. And I think there's a lot of uncertainty with this company. The management is questionable. And then I would have liked to see more of a future plan strategy, particularly with involvement with renewables and green energy. But I think I put it at the crossroads between stabilization and decline. So.
Okay. Well, we've been chatting for a while. Now it's time we can go to the next slide. And then we should be able to have you vote on which one would you want to do further research on? Not necessarily the one that you think is a buy right now, but which one of these presentations intrigues you enough that you'd want to go on out and look at it and do some more research. So now's your time to vote. Vote once, only once. And let's see. Okay, we got 45% of you voting. Can we get up over 50 maybe? We're getting close to 50. We're over 50 now. Now I'm going to press for 60. Can we get over 60? Yeah, we're getting there. Generally, we get around 70% people voting. So let's see what we got. It looks like it's staying. It looks like we're not getting any more. A couple more votes. We'll give it one more shot. Maybe someone else is coming in. 1, 2, 3. Let's go ahead and close it. I don't see it moving. And there it is. It's Taiwan Semiconductor, but Fortinet made a late run. A few more people voted for it. It could have been a dead heat. So anyway, Jonathan, I know you and I have both been looking at sort of the questions. Do you want to go, should we go through some of those? You want to read out some of the ones you see? And
there's one particular that was directed towards you, Taiwan Semiconductor. Isn't Taiwan Semiconductor the main reason China wants to invade Taiwan?
The answer is I wouldn't say it's the main reason, but it is a reason. I think, there's sort of long-term historical things. But yeah, the threat from China is clearly concerning. And I think that's what some of the people like Buffett were looking at as well. The thing is that the thought has always been that there's a silicon shield protecting Taiwan from China, and that some people think that maybe that's getting a little bit less support of the American community. But the thing is that because they make the high capacity semiconductors that are needed in the military is one of the people who was also pushing for the CHIPS Act for us. And that was so that they could be able to have these in areas that they can control. And Taiwan has some plants in mainland China, and the defense industry said, we can't put anything over there. But overall, the threat is there, yes. But I think it's one of the reasons why they're sort of building plants in places like Germany, Japan, and here in America, because it's actually cheaper for them to do them in Taiwan or in some of the other places in Southeast Asia. But yes, it is a concern, but I think that they have enough resources to survive even if they had to pull up stakes. What else we got?
That's all the questions we have.
Anyone want to raise their hand? Any comments? Now's a good time. No one has their hand up? Boy, quiet crowd tonight. I may have to call on a person in my club who did Taiwan Semiconductor a couple years beforehand. Should I, Marilee, you have anything you want to say about this one? If I unmute you? All you have to do, I've unmuted you, Marilee, so if you want to add anything to Taiwan, go for it. Just click on your microphone. I know I'm calling you out. Sorry. Oh, no. Boy, we got a quiet crowd tonight. I think it's probably because these presentations were just so fantastic that we just overwhelmed them. Wasn't that it? Okay. Well, let's just keep going. We had no more questions. If you do have one, go ahead and raise your hand, and we'll try to keep an eye on that. And let's finish up with it. So, if you need to be able to reach any of us, there's the Maryland and DC chapter. And if you need stuff with this presentation, you can go into digging.into.bi at Gmail, and we will get you stuff there. There's a picture of some of us at Bink last year that have helped present over time. So we'd love to have more of you. If you're in the area, if you live in Maryland, DC, or Virginia, we like to be able to feature our own folks and help you get better at doing presentations so that you can take it back to your club. Let's go to our next slide. And also, most of you are probably on this because that's how you signed up. But if you want to, again, join our mailing list, you can be able to share this just on our main page of the DC regional chapter. And we're the ones that send out the email. In fact, our email Maven is in the audience tonight, so thank you, Carol. But anyway, go ahead and do that and share it with people in your club or friends that you're trying to show them how to do things with the SSG. That's what we're here for. That's the mission of this webinar. Next slide. So volunteering, yes, and I know most of the people in this audience are probably volunteers or have done that, but it's a great way to be able to learn new skills. You hang around with folks. That's how I got involved in my chapter for the express purpose of the education and learning. And I have a lot of friends outside of the investing community that think this is boring, but you all here think this stuff's kind of cool and interesting, and so do I. So you can get some discounts and subscriptions to it, so please consider volunteering. Let's go to our next slide. This is what's coming up for next month. We're going to have Truist is the stock to study. UPS is the undervalued feature. We're going to do Descartes Systems is one of them, and the other one is to be determined. So we'll have that hopefully soon and be able to send out a notification on that. Let's go to our next slide. We also have stuff up on Manifest for those people that have a subscription to it. We have different dashboards. We've started this in November of 2020. And so we've broken them out by each year, but also breaking them out by the stock to study and undervalued feature, and then the non-featured ones. And interestingly enough, the stocks that have done the best over time have been the undervalued features. So keep that in mind. But we will update it with the winning selections that we have. But go there and take a look at it. Let's go to our next slide, and I think you'll see there's some hyperlinks, so it will take you straight to them if you can't find it. Those are free. You do not have to have a subscription to Manifest, but there's the link to it. Next slide. And there's, again, our final link to YouTube. You can click on that. Jonathan, do we have any more questions? Anyone? Do we have a question? Anyone?
I wanted to say that I've got a list from that Ross Meredith presentation of things to check on the balance sheet for banks, and some good numbers for that as well. And I will be placing that as well in our chapter's notes.
Okay.
And documents.
So, Marilee, I'm coming back to you. Do you want to add anything to Taiwan Semiconductor? You looked at it before I did a couple years ago. I see your microphone's out, so go ahead for it. No? Okay. No problem. Anyway, that's it. Thank you very much. We'll see you next month, and we should have this presentation up on YouTube either late tonight or early tomorrow. Take care. Thank you for coming by, and be a better investor. Good night, all.
Good night.